Hello, everybody, and welcome to the Hardcore Finance Show with Alex and Shimon. So, not too much has been going on in these past couple of days. Everything's kind of boring, and markets are just flat. Nothing big in the news. But we said we'll record an episode anyway, right, Alex?
Yeah, I feel like we just check the news really quickly, see what's going on. Let's see. Let's see the stocks. Stocks. Oh. What? Well, hello. Wait, what happened?
So Bitcoin crashed to $15,000.
What?
Yesterday.
Why? Who
knows? Because, if you guys thought Three Arrows Capital was fun, you didn't expect the sequel, which is Alameda and FTX. What happened to Alameda and
Sam
FTX?
Bankman-Fried said, Three Arrows Capital, hold my beer, coffee.
Sorry, did you mean scam bankman fraud?
Yes, scam
That's
bankman
how
fraud.
I've heard people refer to him on Twitter. This is not, don't sue me, please. I'm not.
Sam.
This is not libel. This is a joke.
He doesn't have enough money to sue you anymore.
That's good. That's good.
Well, $16 billion in assets. Out of those, $10 billion was lent out to Alameda, which they all lost $10 billion, but no problem. All okay.
So before we get into the analysis of this, I think it's hilarious that he posted. First of all, so there's a future. I learned yesterday that there's a market. Did you know that, Alex? There's a market for people who are owed money, where you can buy on pennies on the dollar. You can get like your money now, and then your counterparty gets it after the lawsuit.
No.
Okay. So basically, if you had money in a place that goes bankrupt, and people don't know yet how much of the customer funds will be at risk, so there's a secondary market where you can sell your claim for what you are owed to somebody else at a huge discount to get the cash now, and that other counterparty takes the risk of how the trial goes and so forth. So it started at like 80 cents on the dollar. At the low point, it got to 10 cents on the dollar. So for all the people that think, there's no problem here, the market at some point yesterday decided, and I heard this on a Twitter Spaces with a guy who was a lawyer in the Quadriga and what was the Mount Gox, all of these litigations. So clearly the market thinks there's a big problem in customer funds. But yeah, basically Sam came out and said look, we need $9 billion. The last thing I saw
9.4.
He's trying to raise $9.4 billion in order to cover some kind of hole that he has in the balance sheet. Nobody knows exactly what's the size of that hole. But the short of it is that he somehow commingled or somehow, if you think about it, FTT, the token that they have, is a claim on future profitability. So when you use that as collateral, you're basically issuing debt. That's what they're doing. So they issue debt, and they're not able to pay out that debt.
Yeah, let's talk about, just for those who haven't heard, FTX, one of the major exchanges of the world, went under. It became insolvent.
What do you mean by went under?
Well,
it froze withdrawals. That's the fact,
it froze
right?
withdrawals, yes. But it's right now insolvent. Well, for a fact, the site didn't work for a period there.
Okay.
It was a 404 error, whatever.
They should have one of these hilarious error emojis, when the site is down, under construction.
Mm-hmm. Yeah.
Sorry, guys. I shouldn't joke about this. People lost a lot of money.
Yeah, people lost a lot of money. And hopefully, anyway, people lost a lot of money. And so it was bigger than Three Arrows and Luna combined. I mean, just so we're aware. And that brought down the space in a significant way. What they did is, instead of having customer accounts backed, especially one-to-one, they lent out the money, the customer accounts, to Alameda, which is a sister company. It's a hedge fund, essentially, a market maker trading firm. But they lent out all that money to them. Because Alameda was losing money, and Alameda lost most of it. And so there are massive problems kind of all around about what happened, not to mention the fact that you don't lend out customer funds. I mean, people are hurt. The industry is just taking a reeling. This happened with FTX International, not U.S. So in the U.S., the regulators regulation helped. And the U.S. is 100% fine and solvent, and everything's working.
The interesting thing is, beyond what they did, it just shows you how that's what Bitcoin is trying to solve. So not having a counterparty. because anytime you have a counterparty, there's risk. And sometimes we know the risk, sometimes we don't know the risk. Like, I heard people that they're actually saying this is much worse than Celsius, not just because of the amount, but because in Celsius, at least you are getting yield for the risk. It's like, okay, I give the money to Celsius, they're paying me some yield, and then there's risk. But here, people didn't get any yield.
Yeah.
So he basically created risk without any compensation.
Yeah, I don't know legalities, the actual legalities. It just feels like this is criminal. I mean, we could look at terms of service. Again, I don't know. I really don't know. To say that it's wrong is probably an egregious understatement about what happened. But yeah, to take customer funds, pledge them as a liability. I mean, technically what he's done is he said, hey, look, we didn't do anything with customer funds. We lent them out, right? And against a collateralized loan. But the loan is collateralized in the token of FTX itself, where FTX and Alameda were essentially the only buyer on the market for it. And the market is thin. So once they stop buying, it just crashes the price, which is exactly what happened. And once it crashes the price, now you go from being extremely over-collateralized to extremely under-collateralized. You also don't collateralize a loan in dollars with, play money or money that has huge volatility. Because when it goes up, you're hugely over-collateralized, and when it goes down, you're screwed.
Oh my God, I saw SBF's tweet today, and it pissed me off so much on two levels. First of all, he said, I'm sorry I fucked up. But then he had like all these excuses. He's like, because I didn't tag the bank accounts correctly, I thought we had like 1 point something ratio of customer funds to whatever leverage. No, I thought we had 0.8 leverage, and it was actually 1 point something. And then he actually said, all of our assets are valued more than all of our liabilities. And I thought that was so disingenuous because, first of all, your assets were priced at the top of the market. So that's one problem. The second problem is, like, even if they were priced today, if you have a bunch of tokens, right? The fact that the total market cap of the tokens you have is something doesn't mean that you can sell half of them and keep that market cap. So I don't understand why did he write this tweet of like all of our assets are bigger than all of our liabilities. Just say I fucked up and that's it. That shouldn't have been the tweet. Sorry guys, I fucked up. Trying to make things better. Trying to raise money. That's it. So like it's just so. I think that people. I heard something really interesting, which is like what the traditional finance industry has learned over 100 years. In crypto, we're making all the same mistakes within 10 years. We're basically all of this is Glass-Steagall. This was like the whole point of the great financial crisis. And like
this shows me actually two very interesting insights for me is, and I love the framing of everything that the financial world has learned over 100 years. We're learning over 10. I think one is that when crypto is let alone to be crypto, DeFi hasn't failed, Aave hasn't failed, Compound hasn't failed. When crypto is left to be crypto, everything works. When CeFi comes in, centralized financing, traditional financing, and we're doing these shenanigans, that's when it all goes to shit. I think that's point number one. Point number two is we always have these intellectual debates, especially people in crypto are hardcore libertarians. And look, we both share some libertarian views, maybe to different degrees. But this fundamentally tells me something that I've always believed in and frankly was shaken, that there is no such thing as a true free market. A free market cannot work without regulation. Now look, I'm not for over-regulating the market. And Elizabeth Warren and others came out and started yelling, oh, we need to regulate more, Gary Gensler, the SEC. The U.S. firms, nothing happened to them. So you actually under-regulated, Gary. You should have given us the rules of the road so people know what to follow.
Well, I'm sorry. Just let me ask you here. What do you mean by under-regulated? In the U.S., again, there was no problem.
There was no problem, sure.
So what?
No, but let's get back to this in a second. I'll answer this question about what I mean by under-regulated. But there certain various rails and regulations actually help markets function. And there is no such thing as this pure invisible hand free market where there is no regulation of any kind, because while the market can correct itself in the long run, people do end up getting hurt as the market shakes into a stable position. The question is, what's ultimately better? All these people getting hurt in aggregate, or the government creating inefficiencies by creating regulation, by doing it right up front, right? And I think that's what the debate is. But I can answer your question about over or under regulated.
I mean, please answer, and then I'll respond to what you said. But yeah.
Let's take a really easy one. The Bitcoin ETF.
Mm-hmm.
Okay, I'll give you two examples. Bitcoin ETF. Without having access to a spot Bitcoin ETF, we get these bullshit futures ETFs with arbitrage in and out. How did Sam Bankman-Fried, how did Alameda start? They started with arbitraging various premiums around Bitcoin. All of these things, you and I would talk about this. Futures are 20% ahead of spot, so all you got to do is sell future, buy spot, and hold it, and you maximize this arbitrage. These things shouldn't happen in in an efficient market, not to this extent. So had there been a spot Bitcoin ETF, you wouldn't have to mess around with GBTC premium or discount. You wouldn't have to mess around with futures ETFs. You wouldn't have to mess around with capital and companies going offshore, which brings up to my second point. There's 3 points. Second point is, had we created the right regulatory structure and rules of the road, said here's what you can do, here's what you cannot do, derivatives, here's what you can do, here's what you cannot do, you wouldn't have these companies going offshore. FTX is in the Bahamas or in Malta or whatever. It would be in the U.S., and then we would actually be protected, because right now U.S. citizens are VPNing into FTX Global because there are more tokens over there. And 3, and the final thing, which I know quite a lot about, is the Howey test for tokens. Every token is a security. Like there was this, case of libraries. Another token, they lost their case against the SEC, and the judge upheld that they are indeed a security. Because the Howey test for securities is an outdated framework for crypto. And so as best as we can apply it, we try to apply it. But it's not clear cut, because crypto it's like a bear. Is it a dog? No. Is it a cat? No. Is it both? Yes. Just families, animals, I don't know. Bears are both dogs and cats. But the point is, like, you can't, if you look at a bear as a dog, it's not a very good dog. If you look at a bear as a cat, it's not a very good cat. Same thing with crypto. You have to, like, security or not, we have to have new rules. We're force-fitting the Howey test into crypto tokens, which it doesn't belong there. So those 3 cases, have we had a clear regulatory structure, things would be unsure, things would be over the top, overboard, and crypto companies wouldn't have to find loopholes and other loopholes in order to be able to operate.
Yeah, I mean, I just don't think that it's. Did you say underregulated? What's the term that you used?
Underregulated.
Yeah. So my point is, like, all of the things that you mentioned, I don't think should be coerced. You know what I mean? So it's like regulation. I think it only hurts. The whole kimchi premium that you mentioned, which is like there was a difference in price of Bitcoin if you buy it in one jurisdiction versus another. It just comes from regulation. It doesn't come from, like, if you could just send
bad
money.
Regulation.
Exactly.
But you can have good regulation.
No, but so I had
Glass-Steagall.
No, but I just disagreed with you when you said that they under-regulated it, because I just don't think that more regulation is the answer. So you can argue about bad versus good. I think of a market, right? So let's say you have like one market where, someone buys the land and says, if you want to start the market here, here's the, it will be air conditioned, it will be clean. Every stall has like certain dimensions, you have certain quality, metrics that you have to have in order to, participate in the market, versus another market that's completely unregulated, where just like people sell stuff on the floor. And it's like, so this is an example of good regulation, but it's voluntary. I think all regulation should be voluntary, should be like people coming together and saying, okay, like if you want to participate in this network, or think of medicine, right? It's like I really believe that the role of the state is to protect private property, to protect basically property laws. And so, yeah, if you're a doctor and someone does a libel and says you are a bad doctor, yeah, you can sue them in court. That I don't consider bad regulation. But if you say you have to get a license from the board of medicine to practice medicine, I think that's very bad.
Why?
Because that's, for example, why the drug prices are really expensive. I always give this example.
That's not true at all.
I give this example. The way to lower drug prices is if I can Skype with a doctor in India. Mm-hmm. He diagnoses me over Skype, and then he tells me which pills to buy, and he sends them to me over FedEx. That would completely lower the prices in the U.S. The only reason why I cannot do this is because it's illegal to send pills from one country to another.
What if
That's
it
how
says
they
you rat
gate
poison and then you die?
exactly.
And then
So then I will only go to a doctor that has good customer
How do you know
reviews,
that?
because that's exactly so if someone does a fake good customer review or a fake bad customer review, then you can sue them for like lying to you. But like my point is, good regulation is minimal regulation. What?
In which jurisdiction are you going to sue the Indian doctor?
So my point is, like, in India, right, you could have some kind of association that says, like, if this doctor is part of this association, we guarantee that everything they say is correct. And if it's not correct, we sue you.
Isn't that regulation?
I say I'm not against regulation.
Yeah.
I'm against monopolistic regulation that basically says you have to do what the government says or else you're not allowed to do stuff. I think that's really bad. And I think it creates more problems than it solves. Yes, it solves some problems, but I think it creates more problems than it solves. And we spoke earlier today, and I told you, what's beautiful about Bitcoin is that it doesn't promise you anything. Nothing. The only thing it promises you is that they're going to be 21 million and that they'll be released in a certain schedule. That's it. No promises about price, no promises about appreciation, no promises about nothing. And so that's why it's a very stable system. Same with DeFi. The smart contract promises you to do what the code says in the smart contract. And it does it. It does it perfectly. But then once you start getting into, like, where can you have a bank license? Where can you accept fiat currency? What KYC do you have to do? All of these things. I think it creates more problems than it solves. And so that's why I objected to when you said that Gary Gensler is underregulated. I think it's like, if anything, they should, because, like, think of the Howey test. It's so nebulous. It's like, if you make profit from the efforts of others, right, then it's a security. What if the efforts of others are in the open source?
Exactly.
You know what I mean? What if the efforts of Isaac Newton helps build buildings that don't fall down? You know, that doesn't mean that, like, a building is a security. So I think it's very, very bad, the current regulation. I really think that so many of our problems, energy regulations, we haven't built a nuclear power plant here in like 30 years. Since the Nuclear Commission or whatever that.
But you're arguing a different side. You're arguing that over-regulation is bad, which I agree with you.
No, but you said under-regulated. That's my whole point.
But
that I disagree.
But the whole industry doesn't know which rules to follow. Something fell. The whole industry doesn't know which rules to follow. We don't know. In listing tokens, I don't know with 100% certainty which tokens that I can list without turning to legal compliance. I should know by myself without legal compliance, this token you can, and this token you can't.
I mean, I would just claim that the best thing for tokens, and again, this is not advice or legal or anything, the ideal situation would be like everything is done in offshore exchanges. The only thing that onshore exchanges do is like you buy USDT,
but regardless
USDC,
of the exchange,
then you send it somewhere in the middle of nowhere. As far as I'm concerned, it can be a moon, right? Like Elon Musk wants to start a moon base. Let's have an exchange there on the moon. We send our tether to the moon. We do whatever the fuck we want. Sorry, we can bleep that out. And then we can do whatever. Because, like, I really think that the regulators contributed more to this problem than they helped.
Also?
Because, like, FTX, you know, it raised money from, like, from Sequoia, from traditional firms that...
No, but the raising money from VCs is different than the regulation. Much different.
Well, no,
the fact that VCs shilled this, and the fact that they pumped some of the stuff, and you sent me a beautiful tweet that they raised money on nothing, and he was like playing League of Legends while he was pitching to them, and they were all like, "Oh, I love this guy." Yeah. It just shows you how big of starfuckers Sequoia and all these guys are. These big VCs who we all look up to, you know, who we all like. Oh, it's gonna be hard getting money from them. All of them have lost credibility. Like, you go to a VC now after this, especially in crypto, Andreessen, like Sequoia. Come on, guys, get the hell out of here. You with the tokens you guys shill and the stuff you pump money into and then pump money out of, you know, it's just, anyway, that's a whole maybe separate thing. But that's misunderstanding what you're investing in. It's not regulation. That's the VC.
Well, I mean, I'm just saying everything would be better if we had a completely free market, and it would just like look much better. I think a lot of the because you think just because of what you said before that all of the big failures have been of regulated entities.
No, I said of centralized entities that act like traditional finance. What I mean is like,
yeah. So if you had like decentralized exchanges, none of that would happen. On a decentralized exchange, they can't take your funds and lend them to somebody else. That's my whole point.
Yes, if it's written in the code.
Because regulation creates a false sense of security. You go to a doctor, right, that has a license from somewhere, you just trust them. You don't check their consumer reviews. Versus if I were to go to a doctor in India, I would make sure it's a good doctor. And it would be on me. I think that's the problem. Like, a lot of people have just, like, outsourced trust to the state, right? And then that's a problem, because then people take advantage of it.
Which is what crypto solves. Trustless or trustless world. I completely, and this I agree with you, that outsourcing trust, right? But just because someone's regulated doesn't mean it's easier to outsource trust.
That's my whole point.
Same example as when cars were mandated to add seatbelts, people started driving faster because you're like, oh, I have a seatbelt. That is just human nature, but that's different than regulation. So here's my
example. But I mean, that's my whole point, because without regulation, you would have to verify. Regulation is what causes the false sense of trust. That's my argument.
I think there are many examples, and we can step outside of crypto and we say, hey, don't put poison into people's drinks, okay? Now, somebody can drink a drink, die, and then say, oh, that the family can say, this company put poison in the drinks. Let's go pitchforks and kill the CEO or whatever. It's a very libertarian, every man for himself kind of world. I think we moved past that world as humanity to say there's certain rules. Property rights is one. That's regulation. Don't steal someone else's property.
No, property rights I don't see as regulation. Because property rights I see as that's the agreement you make with the state, which is like, I give you the monopoly on force, and in exchange you protect my property rights.
Sure.
It's not regulation. It's like a mutual agreement that you make with the state. It's very different from saying, can I be a dentist without having any schooling in dentistry?
It's the same thing. You can say, I give you the monopoly on force and some tax dollars and a common pot of money. You protect my property. I give you some sort of common pot of money. You protect the doctors. Please make sure that everyone who's a doctor can become a doctor. I'm not even arguing for medical regulation. I'm just arguing this example. The point is, where do you draw the line? And this is the ultimate discussion between.
Where do you draw the line? For me, very simple. It's like, is it a monopoly or not? I have no problem giving money to the state to do some things, as long as you can do them in a different way. I have a problem giving power to the state to decide who can do something, and anyone that the state deems that they cannot do stuff, they cannot do it. I'll give you a good example. Lawyers, right? Like, there's many communities, like in Israel, that don't use the legal system, like Muslims and ultra-Orthodox people, which is like kind of like half of the population, not half, maybe 30% of the population. They don't go to court. Like, if you did me something wrong, we go to our village elder or the rabbi or whatever. And what they decide, he has no legal power to enforce. But if you don't do what he says, everybody will like excommunicate you. You know what I mean? Now, you can go to the court, but you choose not to. If the courts were so good, why do people choose not to go to them? It proves that the other systems are better. It proves that the other systems, you don't have to be a lawyer to argue there. You just like go and you have a guy who's like, people say they're smart. That's why they elected him to be the elder or whatever. So that's my point. I have nothing against the state doing things as long as you can do other things like education, no problem. Or I can send my kids to public school, or I can send my kids to private school. That's fine. I'm not against public schools. I'm even happy to pay for public schools for other people, even if I don't use them, because I think it's a good. But like, if they say, like in Germany, where homeschooling is illegal, I have a big problem with that. How can you say to people, you have to send your kid to somebody else for 8 hours per day for 12 years?
Okay, let me ask an example that's a little bit closer to this world. The government says to be a public company, you have to show statements audited by a third party to make sure that
Sure.
Or no insider trading.
Because you have an option to be a private company and raise money privately. That's fine. That's actually an example of a self-regulating body. How? It's like, because you want to issue shares in the New York Stock Exchange. So yeah, if you want to participate there, these are the rules. But if I can find an investor off the street that will just give me money and sign a PDF, I can do that.
Okay. Look, I mean, I guess maybe what I'm arguing for here is that in this space, right? what the SEC should do when I say underregulated is to do this. Say, hey, you want to launch an ICO or you want to launch any kind of token? Okay. You want to launch a token and be listed on a U.S. or regulated exchange? Here's what you have to do. You want to issue a stable coin? Sure. You want to issue a stable coin that, used by, whatever? Just have an audit that says, here's how it's backed.
I agree with that if you say a U.S. regulated exchange, for sure.
Yeah.
But as long as I'm allowed to launch a token and trade it on a Moonbase exchange. No, seriously, I think that makes the whole difference, because then it keeps them honest, If they overregulate stuff and if they put arbitrary rules, people will leave. And that's exactly, in the Twitter spaces that I listened with the lawyers yesterday, that's what they said. They said it's a fine balance, because like the US had all these regulations. They protected FTX US. But then the problem is most people went outside of the US because the regulation limited what you can do on the exchange. And so people preferred to actually take the risk knowingly.
Yeah, but that's the exact knowing risk and take the risk knowingly.
Yeah. So that's a good point. That's like the private market keeps the regulated market honest. It's just like, I'll give you guys another example. So weed in California, when it became legal, in the beginning it was cheap, but then prices started going up because the city put taxes on it, the state put taxes on it, the whatever, unions. And so at some point, people started buying, not me, of course, but some people started buying weed from illegally, even though you could just walk into a store and buy it, because the illegal market was cheaper. That's good. As long as you have an alternative, I'm all about competition. As long as the public regulator has a competition with some sort of unregulated market, I'm absolutely fine with regulation. I agree with you. It's probably good. It's good because it creates rules. Everybody plays with these rules, and it's more efficient that way. But you have to agree with me that if it's impossible to leave that system, powerful people will take over these rules, start lobbying to change them in ways that are not good for consumers.
Fair enough.
Right? That's my whole point.
We should touch, I know we need to wrap, but we should touch really quickly about the CPI print. You want to talk about the CPI print?
Yeah, CPI print. So guys, good news, bad news. The good news is that the NASDAQ is up 7.3% in one day. The bad news is that I looked at what are the top 5 or 10 days in terms of movement of the NASDAQ, and it was all after the .com bust.
Yeah.
Up like 10% in one day after it crashed like 90% the previous months. So but at least the CPI print was good. For the first time, it was lower month over month.
Expectations.
And lower than expectations. Lower on both core and top line. So seems that what the Fed did is finally doing its thing.
It's like, this is probably what the Fed did back in like June and July. When it just takes time. By the time we get to what the Fed has done in like September or October, it's going to be June and July of next year. It's going to be like 5% unemployment. I mean, my God.
People have equated the Fed as like driving when you cannot see the front mirror, but just the rear view mirror, and it's like a delay of like 5 minutes. No, a delay of 5 minutes too. So it's like, look, I mean, I don't know. I think, first of all, I bet Democrats are super pissed that they didn't publish this like 3 days ago. Yeah. It would have really helped them in the midterms. But I mean, hopefully we're at the bottom. I mean, I called the bottom when FTX blew up. I called the bottom of the crypto market, and we'll see.
From your mouth to God's ears, as you always like to say.
Exactly. But yeah, maybe. I mean, who knows? Maybe we're turning around now, and
turn around, right around. Bitcoin's going to 40K.
Yeah.
Oh my God.
What do you think of the CPI print?
I think yes. Give me more. Yes, sir. Give me more. May I have another? Please, sir. May I have another? Lower CPI. Finally. God, this has been the most painful experience of my career by long shot. Yeah, like it's just not even close.
Because last time that Bitcoin dumped in 2018, first of all, it was a smaller part of our portfolio. Second of all, the stock market held up better.
Yeah, the stock market was like, Trump called and yelled at Powell, and Powell freaked out.
No, that was 2018. Oh, yeah, it was Trump. 2018. Yeah, that's true. He was tweeting. He was like, "What are you doing, Federal Reserve?"
Yeah, the independent Federal Reserve. He yelled at them, and they became...
On Twitter.
They became dependent very quickly. And then it came out that, when the Fed pivoted from dovish to hawkish, Biden approved of it. It's like, what? This is an independent body. Why are presidents approving or denying this stuff? But it is what it is. It is what it is.
Again, I just want to leave our listeners with a little bit of optimism. I'm optimistic about technology. I heard Elon Musk's talk about Starship, how he wants to be able to launch like 3 times every day. Did we talk about this? It's like pretty crazy. So one rocket to launch and come back 3 times per day. And he even had it calculated, like how long does it take to refuel the rocket? It takes much longer to maintain the top parts. So he's going to make more top parts than rockets. So you can really do it 3 times per day. And then just basically send the whole base into so I mean, I think this is why we had an argument yesterday. Alex and I were at a policy event here at DC, and somebody was talking about Bitcoin's energy consumption, and I'm like, how did we get to a place, forget about energy, how do we get to a place where people say that consuming something is bad?
I know.
That's like communism. Like, seriously, in communism, they used to say, oh, don't be materialistic, don't consume, don't buy one more piece of clothing. That was the propaganda. And it's like, no, consuming, if we want to reach our full potential, we should consume 100, 1,000 times the amount of energy that we're consuming now. You know what I mean? I saw, it pains me, there's a Reddit thread, really good, retrofuturism, and it shows from the 1920s or something, or 50s. I don't know when they did discover nuclear energy. I don't remember.
The
50s, 60s. Yeah. So it shows like a family in a snow-capped place with like a glass dome with a pool inside, and everybody's like in bathing suits and in the pool and stuff while it's snowing outside. And the title is "The Promise of Nuclear Energy."
Where was it?
From like the 1950s or
Amazing.
60s. Like if you have free energy, you can do so much. You can live anywhere. You can live in Wyoming. You can live in like Montana. Like it can become like Miami. It's all function of energy. It's just now we're relying on the sun to heat us. But like, so I don't think that energy usage is a problem. And I think that all of these financial things, I told Alex, let's zoom out from financial Twitter and just think of humanity and think of like, are we optimistic about humanity? Look, Russia, Ukraine, very sad. It's very sad because it's like just self-inflicted. It's like humanity just inflicting pain on one another. But like beyond that, I hope that, humanity can just like make things better. And that's why we're investing in the NASDAQ.
Into the NASDAQ.
7.3% today.
7.3%. We'll take our wins while we've been licking our wounds for the last little year. So, woo! 7.3%. All right, friends. Like us, subscribe. Hit that like button, as they say, of all the other YouTube videos. If you're watching in Defiance Media, shout out to you. Please do watch us and send us your feedback.
Yeah, please tell us what you want us to talk about. We're back on our normal schedule. So do you want more interviews? Do you want more Alex and I chats? Do you want solo episodes? Let us know.
You should yell at each other more. Fist fights. I'll take that as a yes.
I know who will win that fight.
Shimon.
It's not going to be me.
All right, Shimon. Until next time.
See you guys.